this is exactly what I have tested and it has been working for me. So if you're interested, let's do this together. I'm going to show you live trades that I've taken with it. I'm going to show you even the run that you see it and know how this really works. Now, the diagram right before you is a complete illustration of my trading strategy, which I have found to be one of the best trading strategy there. I'm going to explain it to you in detail before we go to the chart. So starting from the left, the first thing you see is a kind of market structure that I've built as A, B, C. So from A to D is a complete structural set. If you know about market structure, but if you don't know about market structure, let me know in the comment section so I will make a video specifically on market structure, in-depth market structure. I will explain to your understanding. So this is a complete circle of market structure. Structure has been completed, and from observation, whenever a structure is completed, price tends to pull a point of interest known as PO, and that is the point labeled C, and you can see COI there, which means point of interest. That is the point of interest. Price pulls back to that level and begins to continue another structure. So point of interest is what you should know. How do you identify a point of interest in the market? If you do not know this, let me know in the comment section. I will also make a video on it. Now, there are several points of interest, several to use as a point of interest. Number one is the order block. Number two is the breaker block. Number three is the fair value. Another one is the rejection block as our point of interest, depending on the nature of the market we are working with. So whenever price gives me this complete structural circle in the market, what I do next is to spot out my point of interest, which is labeled here according to this illustration. So after that, I will wait to see how price pulls back into it, and if it's pulling back and making structures, you can see here on the chart where I labeled my trend line. If it's making this kind of substructures on a counter trend direction, quickly we pull out my trend line, place it from the top, from the pullback to wherever, and then extend it to that my point of interest. So I will keep monitoring it until price breaks that trend line. So when price gets to my point of interest, to give a certain pattern, probably a double top, a double and shoulder, or any pattern at all before it breaks my trend line, as you can see illustrated on this diagram. Someone might be asking, since I've gotten my point of interest, why do I still need the trend line? Now, it might interest you to know that more price get to your point of interest, it might wipe liquidity, like it might liquidate that level, it's a point. All right, and sometimes you might even be wrong with that point that you selected. So the thing is that the trend line will help you feel this noise, because you have to still wait for the trend line to be broken. The trend line serving as a confirmation for your entry. You filter out this kind of mistakes of getting your point of interest. It will also help you to filter out inducement. Where private people, the trend line will help you to filter it out, and also it will help you to filter out smart money traps, so you don't fall into it and lose your money. Now, how do I get my entry confirmations? I want to wait for price to break my trend line. Once it has gotten to my point of interest, I want to wait for it to come back and break my trend line. Secondly, I will scale down to lower time frame like this or 1 minute time frame. When I get there, I want to now spot out the substructures, the lower time frame substructures that it has created after it got my higher time frame points of interest, right? Then on that lower time frame, after I've spotted out the structures it's created, then I will mark a lower time frame point of interest, probably an order block within that frame, or a breaker block, or something like that, anywhere where price created support or resistance, as the case may be. Then I will wait for price to pull back into that level. Then as soon as price gets back into such level, I will shoot my shots immediately. I will execute the trade. Very simple and straightforward. Now, what about my exit plan? Strategy is not complete if it doesn't show you where to place your stop loss and where to place your profit. So, with this strategy, what is my exit plan? Now, as you can see up there, I have SL1 and SL2. So, my SL1 is on top of my time frame points of interest, which is level C. Now, it depends on the distance between this high time frame SL and my entry point. If it is too far away, I'm not going to use it. But if it is close, when it is too far away, I will now use my lower time frame high. Okay, that structure that was made before I made my entry, before that's high, the high of it is where I'll place my SL. That is exact my SL2. That's if the first one is too far away. It's exactly how I entry. Now my take profit is at the previous structural low or high. In this case, the previous structural, that is where my take profit is. And most times it will be more than 1:2. But as a rule, it is going to be at least 1:2 ratio. The TP must be at least 2 times the stop loss. Otherwise, I will not take the trade. That is it. Very simple. As you can see on the screen right now, there is a trade I took. Very strategy that I just explained. And I'm going to show you. We are going to go to my system. Let me show you exactly how I analyzed the chart and how I took this trade. I'm going to show you 2 examples of how this strategy plays out in real life. So practically utilize this strategy because I'm very profitable. Let's go to the chart. Let me show you exactly what I did to get this result. We are here on my system, and this is a step index chart, which actually, as I said earlier. So here, price was trending downwards, and a break of structure right here. We got a break of structure, and this is my point of interest. I use the point of interest. Okay, so my order block / point of interest. So after marking my higher time frame points of interest, it should draw my trend line. So this is my touch on the trend line. Is the second touch on the trend line, and then this is the third touch on the trend line. After the third, what happened is that price now came and broke the trend line. Then here price broke the trend line to my order block. See, that's my order block. That candle there is my order block where price went and tapped into. Now for an order block to be valid, you only need 2 touches. 2 touches, you have drawn your trend line. Just connect the trend line to the 2 lows or highs in this lows and then extend it. So now we go to our lower time frame. Now let's see what after price broke our trend line. Let's see what happens. So I later decided to use the 10-minute time frame so I can see everything clearly. Now this is me marking my order block. So here you can see I marked that candle, which is my order block, and price went into the other block. Okay, this is my other block and the lower time frame, 10 minutes time point. So as soon as my point of interest like this, I execute my trade, and the next thing is to place my take profit. So this is where I take profit, as you can see here. So I my take profit, I also place my SL, as you can see, my stop loss, very, very important. Now, just as I illustrated in the diagram previously shown, there are two levels where I place my stop loss. Here is the first level, which is the lower time frame high. Now, the second place is the higher time frame high, which is above the higher time frame point of interest. Now, this is dependent on the distance between the entry and that proposed SL level. In this case, I used the Sun SL, which is the lower time frame high, because one is too far away. Obviously, this trade hits the take profit, as you can see. But let me show you this example, which I actually participated in. This second one, I took the trade, and that's the very one I showed you guys earlier in this video. So let's go ahead and see how this played out. So the first thing is to mark my structure, right? I just mark the break. So here is the break of structure. Remember the ABCD pattern. So this is the break of structure right here, and then this is my area of interest. This is my point of interest. I see that my other block, which is my point of interest, the other block is right there above. That's my point of interest. So I play trend line instantly. Now sometimes it could be very tricky. So you can see how this one went. The trend line was somehow straight. So this is my trend line. The move was very, very aggressive. So it's almost straight. So this is it. I place my trend line, and I might decide to place another trend line when I get lower. Just watch and see how I did this, because most times it is very true. You always adjust to the nature of the market you are in. Okay, the market is very chaotic. So this is where you could place your trend line for it to be, more what do you call it? For it to be applicable to the nature of this particular market, and for it to give you what you need. Okay, so now we go down to the lower, which is 5 minutes. In this case, you can see how price came and got touched a point of interest. So price starts at a point of interest before breaking the trend line. So price broke the trend here and also broke this low, which is a change of character. Okay, so it gave us a choke. After a change of character, price pulled back to another block, which is our lower time frame point of interest, and that is our entry point. Whenever this happens, we have our confirmation. So that's our entry point, and that is exactly how I took this trade. And now look at exactly where the TP is. This is the proposed TP level. This is where it should be. Yeah, very straightforward. This is very straightforward. Even the dumbest person can understand this one. So don't forget to place your stop loss. Very important. Above the high of your lower time frame. Now you can see this is the trade I took with it. I took this very trade with it. You can see. Look at. So amazing. So amazing. See, very close to my take profit. I actually took this one below the take profit level because I knew to go down lower. While I did that, I was stop. Can happen. So I was trailing the stop. I was following my stop loss, and it went to my take profit. So this is it, guys. If you have confusion, maybe mention you don't understand, let me know, and I'll make a play on that concept so you can and grow. Thank you guys for watching this Alpha trade, and remember, it can only get goodbye. If you are new to the trading industry, or you're struggling trader, or you're coming across the Deriv market, this video is for you, because in this video I'll be talking about strategy. I'll be telling you the Deriv trading strategy that comes a and profit traders can see I'm running right now, and I'm a massive, actually one of the Deriv volatility 100 index. So what is Deriv synthetic indices? When we talk about Deriv synthetic indices, there are several Deriv synthetic indices markets you can see here. So Deriv is actually a trading broker that have come up their own trading instruments, unlike that trade the indices. So Deriv come up with their own trading instruments. They also have fancy pairs and other metals, but specifically they have some instruments synthetic. They are synthesized. They are meant to mimic market, but these are just programmed algorithms that mimic the real life market. That is what synthetic indices is about. They are programmed computer algorithms that mimic the real life market. So some of the synthetic indices are here. You can see there are several of them. There are some of them in several groupings. You have the range break, the DEX indices, you have the drifts, and the rest. So many of them. But the most popular amongst them are the crash, step and jump index. Those are the most popular among them, and those are the ones commonly traded among synthetic traders. So I am going to be talking about these four most commonly traded instruments, which include the volatility index, boom crash, step index, and jump index. All right, so the first and most popular one is the boom and crash. Okay, so the boom is something this is okay. Looks like on the 1 minute has a lot of spikes. You have the 500 boom 300, you have boom, all right, boom 1000, which is the all the booms. So it spikes upwards. You have this long bullish candle is called spike, okay. And then this one small the ticks. So this is on the 1 minute time frame, spikes upwards, and then you have the ticks. And what you should know is that the spike does not respect your stop loss. Assume you decided to take a trade somewhere here, yeah, and then your stop loss, you placed it above this, right? And then somehow the trade didn't go in your direction, so price comes here, spikes. Remember, this is a plus, so it's supposed to close here. To close here, up to this point, and this is where it's going to, and you will lose crashing. You just go to the higher time frame. So this is where it becomes like the normal forex. This is where it becomes like the normal forex market, right? This is where it becomes like normal markets you should trade. This is it. This is where it becomes like the normal market. Can see that. So depends on how you want to trade it. There are different strategies depending on the style you want to trade. If you want to trade from the higher time frame, which is the best, there's a better strategy. You can just use normal price action strategy. You can use SMC, you can use your ICT, whatever strategy you want to use. But if you want to trade from the 1 minute time frame, you want to be catching spikes and crash. Okay, there are also some other strategies for it. So I'm going to talk about all of that in a moment. Now, let's see the next one. We have volatility. So the father of them all is volatility 75 index. So let me touch on volatility 75. You have it here. You can see this high. This is what it looks like on the 1 minute time frame. So normal, just a normal forex market, like, right? So but on the higher time frame, it looks the same with like the normal forex market, right? So actually this is my point of interest, and I'm waiting for this one for price to get there. Sometimes it will not go there, so it's like price is leaving me already. So that's just it. Just normal forex market. Your normal forex strategy will work on this one. it will work on this one. So but let's see. So that's just, let's see. Another one is step index. Where is my step index? Okay, you have step index, 200, and we have step index 500, as you can see here. So they are father and mother is step index. Yeah, normal forex markets. Okay, so normal forex markets, can see this one. I took this one here and we made profit on this very trade here. So normal step index, and the 1 minute time frame just looks normal also. Yep, just looks normal also. So the next one will be the jump index. Okay, jump 75 on the 1 minute, on the higher time frame, like this medium time frame, it just looks normal, like the normal forex market just looks normal. This is the H4, just looks normal, right? But on the 1 minute time frame, if you look, you're gonna be seeing long bearish and bullish candle. Okay, is it? So this one is a combination of boom and crash. It spikes upward, it spikes downward. Okay, this is it. Can see. So and that thing is that when the spikes happen like this, it is not going to respect your stop loss. Okay, if your stop loss is here, it will drag it to wherever the spike ends. That is how it behaves. If it dumps like this, assuming your stop loss is here, if it dumps, it will drag down your stop loss to here where it's ending. So that is what you need to know about jump indices before you trade it. Okay, so that is it about the major and most commonly traded synthetic indices instruments. There are others actually, but these are the most popular ones, the most commonly traded ones, and they are the ones I can talk about now because I cannot talk about all of them. There are too many. Just like I said, there are too many here. Look at them. There are too many. Each of these, you have the range break. If you open it, you find others inside it. You have the DEX indices. If you open it, you find others inside it. Drifts. If you open it, you find some other pairs, instruments inside them. All of them just like that. Just like that. Okay. Energy. So many of them just like that. So there are a few things I want you to know about synthetic indices. Number one is that synthetic indices is just a computer algorithm that mimics the real life market. Okay, it doesn't it is not a real market actually. It doesn't have anything to do with economic calendars. So because of that, there is no fundamental analysis. When trading it, you don't do fundamental analysis. It's just a technical analysis you do. You don't do fundamental analysis. It is not affected by news, so you don't need your news or anything about news. You don't need it. You don't need a forest factory. Okay, unlike currency pairs, you don't need it. So that is it. And again, there is no sections. There's nothing like sections. You don't have New York session. You don't have Tokyo session. You don't think about weekends when it comes to synthetic indices. It runs 24/7. All right, it doesn't close on weekends. Today is Sunday. I'm actually recording this video, and you can see that it is still running. You can see how it's moving. Today is Sunday. If I come here, you see everything is changing colors. That's because they are moving. They are working. So it works Monday, Sunday, Saturday, every day. It works, right? It doesn't close. There's nothing like midnight close, midnight open, nothing like that. It keeps working all day long. And then the next thing you want to know about synthetic indices is that the spreads are very, very low. As you can see, this is 1 minute time frame. The spread, they are very, very tight, very, very tight spread. Now look at Boom 1000, very tight spread on 1 minute time frame. Now imagine going to 30 minutes time frame. There is no spread at all. There is no spread at all. So that's another good, beautiful thing you need to know about synthetic indices. Yeah, another beautiful thing you need to know about synthetic indices. Look at the volatility, 151s, no spread at all. So that's another thing you need to know about synthetic indices. Very tight spread, unlike currency pairs. Let me see. This is currency pair. You are going to be seeing, for instance, gold. You are going to be seeing huge spread, if at all. You're going to be seeing huge spread, especially depending on the broker you are using. You're going to be seeing big spread, which will be costing you a lot of money. Look at this one, very large spread. Look at here, very large. You can't trade this kind of things. You have to go to a higher time frame. So you don't have that challenge of spread when you are trading synthetic indices. Look at jump. See, zero spread. There's almost no spread at all. Look at it, very tight. So that's it about synthetic indices. I'm sure you would like to trade synthetic indices. Now, another thing you need to know about synthetic indices is that you don't need so much money to trade it. All right, you don't need so much money to trade it. With $1, you can start trading. In fact, with 50 cents, you can start trading synthetic indices and grow your account to $100 and even $1,000 and more. All right, so depending on your skill, how well you have trained yourself and mastered the craft, that's it. Now, what are the strategies for trading synthetic indices? Since you have learned these things about synthetic indices, you only need technical analysis. You don't need fundamental, so you're not scared of news. You don't need so much money to trade it, but the higher your money, the better, sure. But you don't need so much money, right? What are the strategies to trade? There are different strategies to trade synthetic indices, and they are peculiar to each of them. So I'm going to make a video. So this is the part 1 of synthetic indices market. So I'm going to make a video on trading step index strategy. I'm going to make another video on volatility indices strategy. So I'm going to make on boom and crash. I'm going to make on jump index. So I want to tell me in the comment section, which one should I make first? Should I make boom? Should I make for boom first, or should I make a video for synthetic step index, or should I do first for volatility indices or jump indices? If you just say jump, which jump should I make video for? Which jump? Is it jump 25, jump 10, jump 100, jump 75? Which jump should I make video for? If you say step index, which step index should I make video for? Is it step index? Is it 200? Is it 500? If you say boom and crash, which boom and crash should I make video for? Which boom and crash should I make the first video for? Then if you say volatility indices, which volatility indices should I make the first video for? All right, I'm in a trade in this one already. This was a trade I wanted to enter the other day, but I just missed this one by a tick, right? Price just left me by a tick and dropped so much, but I'm in this one. I caught this one, I got this one. So which volatility indices should I do first and all that? So let me know in the comment section, and please like this video, subscribe to this channel, and join our Telegram channel. Where I share free signals and chat setups every day. Check the description box. You are going to see the link to my Telegram channel. Join our Telegram channel now, and let me know the video you wanted to make first, and I'll do that almost immediately. So another thing very important that you should know about Deriv is that they also have a trading view platform. Trading view platform for your chatting. So in case you are someone that loves dealing with trading view, you can just go to your browser and type tradingview.deriv. Okay, so this is it, tradingview.deriv. So yeah, this is the Deriv platform. This is trading view platform of Deriv. You can use them. It has all the features also that you are supposed to make use of. It has all those features as well. Right, so just in case you want to do your chatting on Deriv, on TradingView rather, you can see that. So if you want to create an account, maybe you don't have an account, you can just click on this try free demo, right? Click on this try free demo, or you use the link I'm going to give in the description box of this video. So the link is in the description box of this video. Use my link, my referral link actually. I think that will be better for you. Just click it. I have my referral link in the description of this video. Click it and join and register on Deriv, so it will be nice for you. Okay, yeah. So like I said, it's easy to fund Deriv. You can fund using bank wire, credit cards, e-wallets. You can fund using cryptocurrency. You can also buy cryptocurrency from them actually. You can deposit via payment agents. Payment agents are middlemen that do payments. You give them your money, then they do the deposit for you, all right, and collect their commission. That's it. So it's the same method you deposited with that you are also going to withdraw with, all right. So you don't withdraw with e-wallet or something like that. No, it's not allowed. You have to withdraw via the same method you deposited. So click the referral link in the description box and then register for Deriv. Create a Deriv account and start trading right away. You just need $1, even 50 cents if you can even start trading. You don't need much. So as little as $1, $5, $2, 50 cents, or whatever you have, you can start trading. All right, but the better, the bigger the amount, the better for you. Which one do you want to make video on? If you say volatility indices, which one should it be? Should it be volatility 75 index? Should it be volatility 50? Should it be 25? Should it be volatility 10? Or volatility 51x? Or whichever one? Let me know. 100, jump 10, jump 50, jump 25. If you say step index, should it be step index 200, step index 500, or which one in particular? Let me know in the comment section, guys. Let me know in the comment section. This is the Alpha Trade reminding you that as long as you continue practicing, studying, backtesting, it can only get better. Goodbye.
Yes, guys, this video is going to be an answer or a solution to the age-long struggle of many persons in this trading industry. So if you're a struggling trader or you're a beginner trader, this video is for you, because in this video I'm going to be divulging a very key secret that will help you break through in your trading career. So pay attention and smash the like button for this video, and if you are new to this channel, just subscribe to the channel, and let's go straight to the channel. Let me show you exactly the strategy that has made me move from this to this. Okay, now on the chart here you can see we have this setup. This is a trade we took, and as you can see right here, it is 1:3 to reward ratio. Now we have this simple strategy of using the moving average. As you can see, this is the moving average, the EMA, 40 precisely. Now I am going to show you the full setup of this strategy. As you can see, there are two lines here, the blue line and the orange colored line. These things, they work perfectly. So let's go straight to the first example. This is the first example here. You can see how price was moving here above these moving averages. Price was trending above these moving averages, especially above this orange colored moving average. This is number one thing you need to observe. Price has been moving above the orange colored moving average. That is number one thing you want to observe. After observing that, the next thing you want to observe is that the blue moving average crosses below the orange colored moving average. Now as soon as you see this, make sure you take your trade immediately. Now when you take your trade at the cross below, this is for a sell position. It's for a sell position. when you take your trade at the cross below, your stop loss should come above the most recent high. That is if you are selling. Okay, this is the sell scenario. So your stop loss should come above this most recent high. This is the most recent high here, so your stop loss should come above it, right? Just as we have here. Then this is the cross, as you can see here, which was around this area. So we took the trade right now, right here, and you can see the massive drop. Price dropped here, came back a little, give us light. You can see the sharp drop, and we got about 1:3 risk reward ratio. This is exactly how this strategy works, guys. So if you are not aware of this strategy, then you are sleeping on the bicycle. You are sleeping on your arms. So let's see the next one. This is a buy scenario, guys. This is a buy scenario. Okay, take note of the rules of this game, guys. For a sell scenario, price have to be trading above the orange colored moving average. Price have to be traded above the orange colored moving average. I am repeating it for emphasis sake. Now that's the first rule. The second rule is that for you to sell, you must see the blue colored moving average cross below the orange colored moving average, just as we have here. Alright, now when you see the cross, it is a sell signal. So you are going to take your sell as soon as you see that cross below. After taking your sell, the next thing is where to place your stop, like your stop loss. So where you place your stop loss is the most recent high that you can see at your left hand side. The most recent high you can see by your left hand side, that is the level for you to place your stop loss. Then your take profit must be a minimum of 1:2 risk reward ratio. Now there are two ways I take my profit in this. When price starts moving in my favor and has moved to an extent in my favor, I will start using the moving average, this orange colored moving average, because most of the times it serves as a trend line, as a support or resistance trend line. Okay, so I will use it to trail the stop. I use it as my trailing stop. But if I see that price is respecting this blue moving average, I will now use the blue moving average as my trailing stop. That's how I do it most of the time. Okay, so for here I was targeting, like I told you, you must target a minimum of 1:2 risk reward ratio, but you can target more. So here I targeted 1:3 risk reward ratio. And as you can see, price hit my take profit very easily before going back to hit or to close the above moving average. So here I'm already out of the market. So it is very simple. Now this is a buy scenario. As you can see here, price has been trading below the moving average, so you have opportunity to buy. Okay, you know that you are waiting for a buy. When price is trading below the orange colored moving average, you are not looking to sell, you are looking to buy. Okay, because we trade break and retest strategy. All right, we trade the break and retest strategy. So you can see, so price came and broke above it, closing above it, and came back here. That's where you got this. That's where you got the crossover. Okay, that's why we got the crossover right here. And so you take your trade. When you take your trade here, then look behind you at the left, you see the low here. That's where you place your stop loss. Okay, so this is my stop loss. This is the low here. So I placed my stop loss right there, and I went for 1:5 risk reward ratio. Alright, because if you look, I have this line here. That was the previous high from the higher time frame. I also looked at the higher time frame. That's why I had to place my target here. Then when I placed my target here, I also was trailing the stop. I was trailing it with my moving average. As you can see, price has been respecting the blue moving average and has been trading above the both of them. So I allowed it to continue moving in my favor. I was just trailing it until price hit my take profit. If price didn't hit my take profit, I would have closed it around here. As soon as I see this candle closing below the blue moving average, because price has been respecting it, as we can see here. Price has been respecting it. Alright, so this is how I exit my trade. Let's see another example. This is also a buy scenario. Okay, so at about this point, you can see what happened. Price has been trading below the moving averages, and then at about this point, price broke above it, all right, and closed above it. So we waited for a crossover here, and then we took our trade. Basically, I knew that price was going to come back actually, so I took my trade right here. Then my stop loss came below this low. When my stop loss came below this low, as you can see, then I targeted about 1:6 risk reward ratio here. So at about this point when we entered, you can see how price was, just dangling around here. It was consolidating around here. So at this point, when you are still starting your trade, when your trade is still very young, you will not use these moving averages as your trading stop, because at this point it is going to be going back and forth to moving average. It's going to be closing above and below it, above and below it. So if you use it as a trading stop, you are not going to make any headway. So you have to allow it to move to an extent in your favor before you start using the moving average. That is when you will know which of the moving average price is respecting. Okay, like here you can't tell which one is respecting. It's not respecting anything here. So you will not use the moving average here as your trailing stop until price has moved to an extent. So you can see after that, price began to move. You can see here it respected the blue moving average. Here it also respected the blue moving average. And at about this point, it also respected the blue moving average. Same thing here. So the blue moving average was our trailing stop until price came here and smashed our TP. Okay, so this is exactly how I do use this strategy. It is one of the easiest strategies we find out today, and it works very high win rate. Alright, it works with very high win rate. So let me show you exactly how to get this moving average on your chart. If you want to get this moving average on your chart, what you need to do is to log into your trading view. When you log into your trading view, you're going to see your chart like this without the moving average. Okay, so it's going to be like this without the moving average. So what you do is go to this place where the wrote indicators, click on it, and then type EMA, just EMA. Then you're going to see this first one, this very first one, moving average exponential. Click on it. It's going to appear here. Okay, so I already have it here, the one I set up already, which is this one. And see, this is the one I just taught you how to use. This is the one I'm using. So but teaching you now how I set it up, how to set it up. So what you're going to do is come to the setting here, this setting icon here, click on it. It's going to appear like this. So check this box, okay, this smoothing line, click it, and then come to inputs, click this and select and type in 40. Okay, 40, that's what I want. Then leave every other thing the way they are. Come back here. We want to make the line bigger. Want to make our line bigger. Okay, that's it. Then we want to also make this one bigger. Yeah, this is the color the way it is. So leave other settings the way they are. You can see them here. Leave other settings. Don't change anything on the visibility. Okay, so this is just it. Then click done. Okay, one more thing. So you have to increase the length to 50. All right, you have to increase the length to 50. Remember, the other one is 40, but this one here is 50. Make sure you increase it to 50, then click done. That is it. So good. You have it here. You can see this is the chart. This is the moving average. It's exactly the same with this one. So you have it right here. So this is just how to set it up, guys. If you got value from this video, please don't forget to smash the like button and join my Telegram channel. The link is in the description box or on my bio via TikTok. Okay, so thank you guys for watching. This is the Patrick saying it can only get better. Goodbye.
In this video, I'll be showing you exactly how you can analyze the market very easily and get the clearest direction of the market and find where to execute your trade with absolute precision, as you can see on my screen right now. This is VIX 151S index and it's a 15 minutes time frame. I'll show you exactly how I was able to take this trade, and you can see how the price is dropping massively. You can see how it's dropping very smoothly. Okay, so as you can see on the screen, first of all, I saw a break of structure at about this point. Price broke structure right here and was coming down. So as it was coming down all the way from this point, all the way this here, it came down and started returning. While it was reversing, you can see it was moving in this pattern. Yeah, made a high, dropped, made a higher low here, and then pushed up, broke this previous high, giving us a higher high, and then came down again, making a low, and then pushed up again, made another high, and then dropped again, making another low, and then just like that continue making high. Then when it got here, notice what happened here. At about this point, this was our order block. This is where you find an order block, right? So when price got there, this is exactly where you should be paying attention on the chart. Look at what happened here. When price got there, first it dropped some weeks here, it dropped a little and then made this low. Then price went back up, wiped this level. Price went back up and wiped this level. This is what we call sweep of liquidity. Okay, so price liquidity was raided here, took out a lot of persons that played their stop loss here, and then price started dropping, came down here, broke this low, giving us what we call a break of structure, and then dropped, and then went up again, retested this level, dropped again, went up here, it made double high, and then wiped the high. As far as I saw this swipe, that was when I entered my trade here. This was a raid of liquidity, so I quickly entered my trade here. I can see how smoothly price dropped, and that's how it dropped up to this level. And I'm going to take my profit at about this point. Okay, I'm going to take out my profits at about this point. This is how you trade with precision. This is very simple. If the reason is that sometimes it might take a lot of time, waiting for all these things to play out, but it is better to wait for it to play out and then make profit than for you to rush into the trade and get taken out by the markets. Okay, so patience is key in the market. Once you have this knowledge, have patience, be disciplined enough to wait for price to do its things. Once price has finished doing its things and then giving you the setup you want, then you can execute your trade. This is just it, guys. So if you got value from this video, please smash the like button and turn the post notification bell, and check the description box. You see a link to my Telegram channel. Click and join my link for more tutorials and for free signals. Also, check this channel and watch more videos like this. Goodbye. So after I hit this unfortunate loss as a result of news events, I decided to go all out and learn how to trade news. Since then, it has been amazing, and my news trading strategy is almost 100% accurate. But because of human errors that can occur, I will say it is 95 to 99% accurate. Because of this scenario where I saw a buy and I mistakenly clicked sell. As soon as I realized it, I had to close that sell in loss and place the buy which recovered all the losses. So my new trading strategy is 95 to 99% accurate, and this is me trading news live. All I just need to do is to do my fundamental analysis using my Forex Factory or my FX book, and then I'm able to scoop some money from the market. So here I'm going to take a sell, as is seen here. I'm going to take a sell. This is it. So I'm going to take some sells here. My target is to hit $100, like to make $100 profit on this account. So I'm going to take some sell. Already the market has made some move before I entered, but it's still fine. So I'm going to take some sell, and I'm very sure I'm going to win this trade, because over time, from my back testing and my live trades, it has proven to work almost 99% accurate, like almost 100% accurate. So you can see it's already moving in my favor. This is my FX book notifying me. So it is already moving in my favor. You can see that. So this is just how it works. Like very fast, you have made your money and you're out of the market. You don't need to start doing some crazy analysis. You don't even need to do any technical analysis. You just need to know how to do a fundamental analysis. Alright, and this is the best way of trading. You can do your other businesses, your 9-to-5 job, and still do your trading. Just trading news. All I do is I set my alarm 5 minutes to the news time, and then I plan what I want to do, set the loss size I want to use. Once it's time, boom, I hit the buy or sell according to my analysis, and within a short time I close my trade. I'm done for the day. I wait for that news time. That's just what I do, and since then my win rate has been massive. So I'm hosting a 30 days news trading mentorship. So all you need is just 1 week to learn it. Okay, I will teach you guys how to do it live in just 1 week, and then the remaining days we'll be trading it together live. Believe me, before that month, whatever it costs you to join the mentorship, you would have recovered it multiple times. You can start trading news with as little as $5, and you can grow it to $100
or even $500
in just a week. So just to get started with the news trading mentorship, message me now to get started.
You can also join my Telegram community, which is totally free, so you can get more educational materials there and also reach me personally. If you're watching on YouTube, the link is in the description box down below this video, but on TikTok it is on my bio. Just click the link. Hello guys, look here on your screen and you will see me starting to run a robot on an account of $1,000. Let's see how far we are going to take this account to. Okay, so because I'm starting this account with $1,000 doesn't mean it must be $1,000. You can also run it on a $50 or $100 or $200 account, depending on how much you have. Okay, so all you need to do is contact me via my Telegram link, my Telegram channel. The link is in the description box, and also in my Telegram channel you also find my WhatsApp link, okay, where you can also reach me in case you can't message me via Telegram. Just click the Telegram link in the description box, join my Telegram group. You can use my WhatsApp link and message me on WhatsApp or message me via Telegram. Anywhere you'll be able to reach me, and I will get this across to you. Okay, so this robot works amazing. It works wonders, and once you install it on your system and attach it to your MT5, you don't need to do anything again. Okay, just make sure it's installed on your PC and attached to your MT5, then attach it to any pair you want it to trade, any instrument you want it to trade. Basically we are trading VIX 75 right now. Okay, you are trading VIX 75 right now, so you can see how it's moving. The account is up to 4,300 already. So this is to show you that this robot works wonders. It works really well. Okay, now some features you need to know about this robot is that the stop loss, the robot takes trade and sets stop loss automatically, and also sets take profit automatically. And again, once the trade is in your favor and has gone to an extent in your favor, it moves the stop loss to a break-even point to protect your capital, so you don't be in profit for a while and end up losing again. Okay, so that's how amazing this stuff is. Like now it's is in profit now. Let's see. Yeah, it has moved the stop loss to break even point. Okay, so if it goes back now, it will just close at break even, but this seems to be going towards take profit. Okay, so let's see how this one goes. It might hit the take profit, or if it goes back, it just hit the break even and you will not lose. All right, that's how this works. Okay, so the target here, you can see, is 1:3 risk reward ratio. So this one we actually hit the take profit, and it is 1:3 risk reward ratio, which means if you are risking $100, you are going to be targeting a profit of $300. That's how this robot works, and you can actually adjust your stop loss and take profits. All right, you can adjust them according to what you want. Also, your lot size, you can adjust it according to your account size and according to your risk tolerance. Okay, some people like to risk much, some people like to risk small. So because of that, we have made a provision where you can easily adjust the lot size and tell the robot what to be taking and what to be risking. All right, that's how this works. So you just need to install it and go to sleep. It will be trading for you. It will do the analysis automatically, take trade automatically, and do all the executions automatically. Your own is to just come and withdraw your money. That's how it works. So contact me via Telegram. The link is in the description box. Click the link and you'll be taken automatically to my Telegram channel. You can also see my WhatsApp link there, so you can click it and also message me via WhatsApp in case you want to reach me through that medium. So that's just it. This robot is amazing. You can see we are up to 9,000 already. So that's just it, guys.
What is the best trading strategy in the market, if I may ask? Is it ICT? Is it SMC? Is it price action? Is it Wyckoff theory? Is it Quasimodo? Is it break and retest? Is it support and resistance? Is it supply and demand? What exactly is the best trading strategy in the market? Because many people complain of so much chaos in the market. So how do you navigate through the whole chaos in the market without getting your hands burned and without losing your hard-earned money? That is what I want us to discuss today. I have come up with this strategy that you are seeing on your charts to show you the best way of trading the market. This is exactly what I have tested and it has been working for me. So if you're interested, let's do this together. And I'm going to show you live trades that I've taken with it. I'm going to show you even the running one that you see it and know how this really works. Now, the diagram right before you is a complete illustration of my trading strategy, which I have found to be one of the best trading strategy out there. I'm going to explain it to you in detail before we go to the chart. So starting from the left, the first thing you see is a kind of market structure that I've labeled as A, B, C, and D. So from A, B to D is a complete structural circle. If you know about market structure, but if you don't know about market structure, let me know in the comment section so I'll make a video specifically on market structure, in-depth detail of market structure. I will explain it to your understanding. So this is a complete circle of market structure. One structure has been completed, and from observation, whenever a structure is completed, price tends to pull back to a point of interest known as POI, and that is the point labeled C, and you can see COI there, POI there, which means point of interest. That is the point of interest. Price pulls back to that level and then begins to continue another structure. So point of interest is what you should know. How do you identify a point of interest in the market? If you do not know this, let me know in the comment section. I will also make a video on it. Now, there are several points of interest, several things we use as our point of interest. Number one is the order block. Number two is the breaker block. Number three is the fair value gap. Another one is the rejection block as our point of interest, depending on the nature of the market we are working with. So whenever price gives me this complete structural circle in the market, what I do next is to spot out my point of interest, which is labeled C here according to this illustration. So after that, I will wait to see how price pulls back into it. And if it's pulling back and making structures, as you can see here on the chart where I labeled my trend line, if it's making this kind of substructures on a counter trend direction, I quickly will pull out my trend line, place it from the top, from the beginning of the pullback to wherever, and then extend it to that my point of interest. So I will keep monitoring it until price breaks that trend line. So when price gets to my point of interest, it is going to give a certain pattern, probably a double top, a double bottom, head and shoulder, or any pattern at all before it breaks my trend line, as you can see illustrated on this diagram. Someone might be asking, since I've gotten my point of interest, why do I still need the trend line? Now it might interest you to know the point of interest. It's like it might liquidate that level. It might just be a liquidation point. Alright, and sometimes you might even be wrong with that point of interest that you selected. So the thing is that the trend line will help you filter out this noise, because you have to still wait for the trend line to be broken. So the trend line serving as a confirmation for your entry will help you filter out this kind of mistakes of marking your point of interest. It will also help you to filter out inducement. Where price wants to liquidate people, the trend line will help you to filter it out. And also, it will help you to filter out smart money traps so you don't fall into it and lose your money. Now, how do I get my entry confirmation? Number one, I want to wait for price to break my trend line. Once it has gotten to my point of interest, I want to wait for it to come back and break my trend line. Secondly, I will scale down to lower time frame like the 5 minutes or 1 minute time frame. When I get there, I want to now spot out the substructures, the lower time frame substructures that it has created after it got to my higher time frame points of interest. Right? Then on that lower time frame, after I've spotted out the structures it's created, then I will mark a lower time frame point of interest, probably an order block within that lower time frame, or a breaker block, or something like that, anywhere where price created support or resistance, as the case may be. Then I will wait for price to pull back into that level. Then as soon as price gets back into such level, I will shoot my shots immediately. I will execute my entry. Very simple and straightforward. Now, what about my exit plan? A strategy is not complete if it doesn't show you where to place your stop loss and where to place your take profit. So, with this strategy, what is my exit plan? Now, as you can see up there, I have SL1 and SL2. So, my SL1 is on top of my point of interest, my higher time frame points of interest, which is level C. Now, it depends on the distance between this high time frame SL and my entry point. If it is too far away, I'm not going to use it. But if it is close, I will use it. When it is too far away, I will now use my lower time frame high. Okay, that structure that was made before I made my entry, before my entry, that's high. The high of it is where I'll place my SL. That's exactly where I marked my SL2. That's if the first one is too far away. Okay, that is exactly how I make my entry. Now my take profit, as you can see, is at the previous structural low or high. In this case, the previous structural low. That is where my take profit is. And most times it will be more than 1:2. But as a rule for me, it is going to be at least 1:2 risk reward ratio. The TP must be at least 2 times the stop loss. Otherwise, I will not take the trade. That is it. Very simple. As you can see on the screen right now, here is a trade I took using this very strategy that I just explained. and I'm going to show you. We're going to go to my system. Let me show you exactly how I analyzed the chart and how I took this trade. I'm going to show you about 2 examples of how this strategy plays out in real life, so you'll be able to practically utilize this strategy because it is very simple and very profitable. Let's go to the chart. Let me show you exactly what I did to get this result. So we are here on my system, and this is a step index chart, which actually I took the trade as I explained earlier. So here, price was trending downwards, and we got a break of structure right here. We got a break of structure, and then this is my point of interest. I use the order block as my point of interest. Okay, so my order block / point of interest. So after marking my higher time frame points of interest, the next thing is to draw my trend line. So this is my first touch on the trend line, and this is the second touch on the trend line, and then this also is the third touch on the trend line. After the third touch, what happened is that price now came and broke the trend line. Then here you can see how price broke the trend line and reversed to my order block. You can see that's where it reversed to my order block. That candle there is my order block where price went and tapped into. Now for an order block to be valid, for a trend line to be valid, you only need 2 touches. Okay, 2 touches, you have drawn your trend line. Just connect the trend line to the two lows or highs, in this case 2 lows, and then extend it. So now we go to our lower time frame. Now let's see what happens after price broke our trend line. Let's see what happens. So I later decided to use the 10-minute time frame so I can see everything clearly. Now this is me marking my order block. So here you can see I marked that candle, which is my order block, and price went into the order block. Okay, this is my order block, and that was after price broke the trend line, and we have to mark our order block from the lower time frame, 10 minutes time frame at this point. So as soon as price gets to my point of interest like this, I execute my trade, and the next thing is to place my take profit. So this is where I'll place my take profit, as you can see here. So I place my take profit. I also place my SL, as you can see here. My stop loss, very, very important. Now, just as I illustrated in the diagram previously shown, there are 2 levels where I place my stop loss. Here is the first level, which is the lower time frame high. Now, the second place is the higher time frame high, which is above the higher time frame point of interest. Now, this is dependent on the distance between the entry and that proposed SL level. In this case, I used the second SL, which is the lower time frame high, because the other one is too far away. Obviously, this trade hit the take profit, as you can see. But let me show you the second example, which I actually participated in. This second one, I took the trade, and that's the very one I showed you guys earlier in this video. So let's go ahead and see how this played out. So the first thing is to mark my structure, right? I just mark the break of structure here. So here is the break of structure. Remember the ABC strategy pattern. So this is the break of structure right here, and then this is my area of interest here. This is my point of interest. You can see that my order block, which is my point of interest, the other block is right there above. That's my point of interest. So I place my trend line instantly. Now sometimes it could be very tricky, so you can see how this one went. The trend line was somehow straight. So this is my trend line. The move was very, very aggressive. So the trend line is almost straight. So this is it. I place my trend line, and I might decide to place another trend line when I get lower. Just watch and see, because most times it is very tricky. So you have to always adjust to the nature of the market you are in. Okay, the market is very chaotic. So this is the second place where you could place your trend line for it to be, more what do you call it? For it to be more applicable to the nature of this particular market, and for it to give you
what you really need. Okay, so now we go down to lower time frame, which is 5 minutes. See how price came and got touched our point of interest. So price starts our point of interest before breaking the trend line. So price broke the trend line here and also broke this low, which is a change of character. Okay, so it gave us a choke. After a change of character, price pulled back to another block, which is our lower time frame point of interest, and that is our entry point. Whenever this happens, we have confirmation. So that's our entry point, and that is exactly how I took this trade. And now look at exactly where the TP is. This is the proposed TP level. This is where it should be. Yeah, as you can see, very straightforward. This is very straightforward. Even the dumbest person can understand this one. So don't forget to place your stop loss, very important, above the high of your lower time frame. Now you can see this is the trade I took with it. I took this very trade with it. You can see, look at it. So amazing, and see, very close to my take profit. I actually took this one below the take profit level because I knew that it was going to go down lower. But while I did that, I was also protecting my I was trailing the stop because anything can happen. So I was trailing the stop. I was following it carefully with my stop loss, and you can see it went to my take profit, giving me more profit. So this is it, guys. Thank you for watching. If you have any confusion, maybe there's any term I mentioned you don't understand, let me know in the comment section and I'll make a video specifically on that concept so you can learn and grow in this game. Thank you guys for watching this Alpha Trade, and remember, it can only get better. Goodbye.
In this video, I took a $30 account to over $500 in just 6 days, in less than 6 days. So guys, I did that using the Royal FX trading robot, and let me show you exactly how it went on. Now you can see I've taken the first trade, and let's see how it goes. Okay, this one hits break even, and we've taken the second one also, and you can see the stop loss over there, and this is the entry. So the stop loss has been moved to break even and TP hit. That is how this robot works. We have it has a trailing stop actually. Okay, it has a break even system, not trailing stop. So when the trade goes in your direction to an extent, it will break even, so that the trade doesn't reverse against you and you lose something that was in profit already. So it is better it ends as a break even than for you to lose. That's how this robot works. The risk management is top notch. Okay, the risk reward ratio is 1:3. That's if you are risking $100, we are making 300. If you are risking $10, we are making $30, just like that. 1:3 risk reward ratio, which is also adjustable according to your choice. You can decide to reduce it to 1:2 or increase it to 1:5. It's all up to you, but the default is 1:3. And then you can see the lot size is good and also adjustable. So everything about this, when you get this robot, you just use it this way I've set it, or you can decide to make few adjustments, like the lot size. If your account is small, you have to reduce the lot size. Okay, and depending on the pair you are trading, you have to reduce the lot size or adjust it accordingly. Okay, so let's see this trade. Let's see how it goes. It's already at break even. It has moved the stop loss to break even. So at this point, we are not running any risk of losing anything again, and it's in our favor. And good, we hit the take profit, and our account is up to $257, as you can see. So we are in the right direction. Okay, so this one hits stop loss, and this one is also going in our way already. So let's see this retracing now. Okay, one goes in our direction to an extent, the stop loss will move. Okay, the stop loss has moved to break even, so we are risk free now, and we hit take profits. That's how it works, guys. That's how it works. You really need to get this. The Telegram link is in the description box. Click the Telegram link and reach me directly and request for this EA. Okay, if you are watching on TikTok, My Telegram link is on my bio. If you're watching on YouTube, my Telegram link is in the description box down below this video. Okay, it our TP, so you have to 358. Let's see how it goes. So guys, this is to show you how good the system is. This to show you how well it works. We took our time to build this. Okay, so everything here is also adjustable according to your preference and according to your choice and according to your account size. Okay, so this one is at break even, and it's going our way. Might it take profit? I don't know. Just see, is it tracing against us? But we are risk free nevertheless. We are risk free already. So let's see how it goes. Let's see how it goes. Okay, yeah, it hits TP and we are up to 423. This is massive. Now this one hits break even. This one hit SL. Okay, we another one break even point reached and TP hit. So we're up to 429. So this one now, let's see how it goes. If it's okay, break even. Okay, so we are still at 429. You see, because it was a break even. Okay, let's see how this one goes. It's still against. Okay, okay, let's see how it goes, guys. Let's see. So this is exactly how this it works. Royal FX robots. We are at break even right now, and TP hits. So 489. 489. That's where we are right now. Let's see. Okay, this one hit break even, and then we are in another one right now. Stop loss hit on this one, so we are down to 446. Okay, let's see how it goes, guys. You can contact me via Telegram. The link is in the description box if you're watching on YouTube, and on my bio if you're watching on TikTok. All right, so get me via Telegram and request for it, and I'll give it to you at a discounted rate. So this one hit TP and we're up to $500. Congratulations to us. Get this robot now at a discounted rate and enjoy. And remember that it can only get better. Goodbye.